3 minutes. One minute. Gather around. There's a few seats at the front. I think there's one more pink glazed donut in the back. How you doing, huh? Welcome to Forex.Today. 3, 2, 1, hit it! Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Guy, I'm not sure if they have wagon wheels in America. Very often I find those types of things are different in America than they are in Canada, so very interesting. Anyways, good morning, everybody. Today is a Thursday. Typically, it's Take Profit Day. Typically, it's Plan Out Next Week Day, but this is a great day for being a currency trader. So today, I imagine we'll cover dollar pairs and yen pairs, gold, oil, Bitcoin, but ultimately, we go on the path that you choose. You are the boss. So, ask questions, get involved, take notes. I might actually say something intelligent. What else? How can I help? Technical analysis, fundamental analysis, macroeconomics, trader psychology. Yesterday we talked about the desire of becoming and the demand to become excellent at whatever you do, and typically that's some level of obsession. So what are you doing to create the obsession if you're not naturally crazy? Most people are average. So how does an average person produce unaverage results? You create your obsession. So anyway, so that was one of the messages we talked about yesterday. So I'd like to thank Traders Way for being the sponsoring broker of our community. If you need a broker, guess what? They broker. What does that mean? Well, they have to pay for a whole bunch of liquidity partners. So when you pull the trigger on a trade, it gets executed and sent out into the interbanking system through said liquidity partners. Okay? They also have to license various trading platforms and all that kind of stuff. So that's what they do. Now, if you like the fact that Traders Way will take your order and instantly enter it into the interbanking system versus be booking you and trading against you, then you should consider tradersway.com. Open up a demo account. You go to tradersway.com. It's in the bottom right-hand corner. Open up a demo account. Takes seconds, like 12 seconds. You'll be in a back office, and then you can download MT4, MT5, CTrader, various other platforms, place some trades. You'll see the execution speed is fast. That's good. The swaps are big. That's good. The spreads are narrow. That's good. If you have an ECN, the costs are low. That's good. Tradersway.com. All right, so what do you guys want to talk about today? Robin took some profit on USD Rand. Okay, that's cool. We can start there while you guys post. Exotics, USD Rand. So what I have done so far is I moved my stop to break even. So that's where I sold yesterday. And it's up an equivalent of a couple of hundred pips. Very nice. Okay, I still have an order here. I guess I should just cancel it. We're not going to be there for a while. That's the one I missed. All right, so anyway, so we're here. So let's try to figure out the profit-taking issue. Why did you take profit? R1 to S1 maybe? Yeah. So typically, if you're looking at weeklies, for example, this is a weekly. In that case, this is the target. Now, maybe you looked at it as the monthly play. The monthly play is the counter trend back to the central pivot. Is that why you took out? Either way, both of those things are fine. Okay. Whether it's see, this is the counter trend trade back to the CPP. So the pink trade is good. That makes sense. If you took profit there, that makes sense. And then if you did the weekly one, the weekly to the weekly, okay, that's an inside S1 R1, R1 S1 play. And that also makes sense. It's basically the same thing, right? So if you got out for some other reason, what, the psych level, I would work on your fundamental reasoning, but ultimately we don't know, right? My pivots are weekly are between S1 and S2, support 1 and S2. Yeah, that's what M1 is. Although S2 is way down here. Okay, S2 is way down here. S1 is right here. The actual target would be this, but in a normal week, but this is an inside week. That's an N. Inside week. So the only thing that matters in this situation is the R1 S1, if that's what you're playing. Okay. Okay. And by the way, when you say you're somewhere in between S1 and S2, what you're talking about is M1. So the next number that matters is 1480. Okay, so anyways. So good job, good trade. Wayne, what do you think is fair market value? Well, again, the think is irrelevant. It's a specific number. So Fareed, you tell me on what time frame do you want fair market value? Probably not the hourly chart, right? So on a daily chart, for example, what do you think, Fareed? Daily? Seems like that could be a reasonable answer. Yeah, okay. So we bust that out. And the fair market value is, where she go? Right there. 1565. Okay. Okay. So it's very definitional. There isn't an opinion there. That's it. That's what that is. Okay. And what that'll tell you is that the market is bearish, isn't it? So the fair market value is above the current price, so the market is bearish. But of course, we already know that. It was the basis of our trade. Okay. So here's fair market value. And we're here. Okay. So what you'll find is in a couple of days, this is going to continue down, and this 200 EMA is going to be to the right and lower, touching the top, and you'll be upset because you missed the entry. You'll say, why didn't I sell it off the 200 EMA? Well, because you can't do it when it's fair market value. You have to do it while it's bearish. Okay, so the real trade here is this. Okay, remember, we already have this locked up. So we talked about this back in January, I think, wasn't it? So, so this is just a cycle. Okay, and maybe we get something like this in April. But right now, we're just following the cycle. Okay, okay, and I'm hoping this. And now the hope part is fundamental analysis. Okay, so it's not hope per se. Fundamentals will tell you longer that it'll break out to the downside. Okay, around 1550. Yeah, that's a good number. Yeah, that's a good number. I missed that one. I was doing something else. But I got in, well, lower. So, yeah, 1550 is a good number for that. This one I missed as well, if you recall, a couple of days ago. I said I tried to catch it on the pullback, and it just I never quite got it. So, too bad. Okay. All right, so that's that. By the way, ECB, right? ECB. So no change is going to happen. Okay, no change is going to happen. The ECB is an expert at doing nothing. Okay. And then what? Thank you, Bear. So they're going to do nothing. Bond yields are going to go higher, and they're going to tell you that makes the euro strong, which I suppose is somewhat true. But I'll remind you that if I told you 6 months ago that this week the euro was going to get strong, it may not necessarily be completely true that it's because of because of interest rates are higher in Europe this week, and the euro is strong this week. So therefore, it must be those yields. Okay, yeah. If you, yeah. Keep eating ice cream, you'll get a suntan. All right. Cool. So let's go to our indices. Yen weak. Okay, that's good. Dollar strength is wait. Who clicked the button? There we go. There's the dollar weakness we've been waiting for all this time. And it's happening now, and you should be crushing it. Kiwis recovered. Aussies recovered. Pound is strong. CAD is strong. Euro and Swissy are meh. But you'll see Euro will gain some strength. Whoa, double tipping, Barry. Muchas gracias, senor. I'll put it in the fund. I opened a 19-year-old bottle of Chardonnay last week, and so I'll put it in the fund to replace that bottle. 19-year-old Chardonnay. I've had it for, I must have bought it when it was 2 years old. So, I've had it for 17 years in storage. I drank it last week. Got to replace it. All right. So, so let's follow the dollar story for a bit. Makes sense, I think. A lot of this will be following on from last week's and yesterday's analysis. I had it too long, Crypto Miner, but it tasted more like brandy than vinegar. So it was too old though. Oh, come on, Barry. Actually, I think I do cook a lot. I think you do know. Got to stop touching the mic. Okay, so anyways, let's go back. This is from a day ago, 2 days ago, last week, last month, and last year. But anyways, this is the entry, and we're just starting to test. Okay, we're just starting to test. Okay. So, what do we do? Well, the counter trend here is back to 121. So we'll see. This is a serious test though, isn't it? Okay. Tyron, why would you trade two currencies that are strong? That doesn't make sense to me. So now we got to wait. How will you feel if it does this? Indifferent? Okay. So it's again a test of your conviction for your analysis. Remember, if you don't have any analysis, you don't have any conviction. For those that trade a lot, I'll ask you, what is it that you're trying to do? And very often you won't know. Okay. PK says I'm a bear on euro. Oh, I'm not a bull on euro. I think it's one of the worst currencies on the planet. But it's going to go up in value. Okay. Okay, it will go up in value. Now, I think other things will go up in value more relative to the euro. So, like if you were looking at euro odd, okay, that would probably come down, but euro dollar is still going to go up. It just means that Aussie dollar will go up more than euro odd down and more than euro dollar up. Okay. It's not risks though, Barry. It's relative strength. So right off the bat, when somebody says, I just showed you an index where Aussie is up and CAD is up, okay? And then someone asks, should they sell Aussie CAD? It just tells me they don't understand. So it's not risk, it's just relative strength. So someone that brings that up right when I say they're both strong just doesn't understand. So it's not sort of a failure of brain power. It's a failure of knowledge, right? So, yeah, it would make no sense. So my job now is to try to have a positive impact to say there's no trade here. Except, the trade that you guys should have already come up with, right, within a millisecond of me starting my webinar, is these currencies versus the yen. So what we know is odd yen is probably going up. CAD yen is probably going up, but trading Aussie versus CAD, clearly they just don't understand, right? So it also tells me they don't manually do relative strength before trading. And since what we do is relative, and you're not doing relative strength and either using an indicator or doing it the old-fashioned way, once again, doesn't understand the concept of currency trading. So again, I'm trying to reemphasize that. So you would look at something like, you start with CAD, for example. So let's put this on as typical, put that monthly or whatever. All right, so CAD yen, CAD Swissy, Aussie CAD, USD CAD. Okay, so I'm short USD CAD here. Okay, making money on this one too. CAD versus Swissy is up. CAD versus yen is up. CAD versus Aussie is generally up, but right now we have the glitch in the matrix, and then CAD this way. So the one thing I can tell you instantly, okay, is CAD is strong. CAD is strong. CAD is strong. Okay? Oh, strong is what I'm writing. Strong. And then over here, CAD is strong, but not in the moment. So now the question is, should they watch Aussie CAD roll over here and head down? Well, all I know right now is CAD is strong versus everything we've analyzed, except Aussie. So now that person is saying, okay, they want to take something strong and then sell probably the strongest currency in the world. So that doesn't make any sense, right? So even if this worked out, there's got to be 3 or 4 other currencies that will produce twice as much profit for less risk. Okay? Does that make sense? So even if they get this right, there's probably 2 or 3 other things that are righter, which if you take the time to do relative strength and you believe in buying CAD and selling Aussie, I think you'll do better probably selling, I don't know, something but not Aussie. Okay? So, but right off the bat, okay? See, that's where when people focus purely on technical analysis and they say, see, Wayne, that's going to flip over here. Yeah, you might be right. It doesn't make it a good trade. It makes it a mediocre trade. But I think you'll find 10 years from now, your profits will go up significantly, not because you're making more trades or better trades. You just do less mediocre trades. Because the mediocre trades either lead to more losses, maybe smaller losses, but they're not leading to winners. But more often than not, they break down your confidence in what you're doing, and you make bigger mistakes down the line. And we never want you to be in a situation like that, where you start changing things to find out why you're getting results that you know that are less than what you expected. So then you start changing the good things that you're doing to try to get better results, and it just turns out like if you actually just took less mediocre trades, you would stay confident because your winning trades would happen more often and for more money. Okay, so it took a while for me to get rid of the mediocrity. And if anyone's read my book, they know the secret to get out of those mediocrity trades, not the getting bigger winners. The secret to improving your trading and understanding your strengths and weaknesses comes from journaling. And journaling the way that I teach. Most people don't journal, and then when they do journal, they don't journal right. That's what 1/3 of my book is focused on journaling properly to uncover your strengths and weaknesses, right? And therefore improve as a trader. So you'll see one of the best benefits of following that advice in my book is that you just don't have the time to journal mediocre trades. So one of the great things you'll find is that at the end of the week, it might take you 7 hours of work to journal the way I teach you, to go through all your trades. And you're like, holy crap, this is taking up like almost my entire Saturday. So you either don't do the work, which means you're going to fail, or you change your behavior when you're trading. And you're like, this is a mediocre trade and I know it. I don't want to take it because it's going to cost me, it'll take you 3 seconds to trade it, but it'll take you 25 minutes to journal it. And you're like, I don't want to waste the 25 minutes. I'd rather do something this weekend with my family. I'd rather watch the football game. I'd rather go to the beach. I'd rather have a barbecue. But to spend a half an hour on a piss poor trade, you're like, I'll skip the piss poor trade and save the 25 minutes of my time. Ha 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 ha! And all of a sudden, if you skip 10 mediocre trades or in the course of a week, you're saving yourself hours, but you're also got a lot less piss poor trades. And you're like, I'll only take the trade if I expect to make money because I only want to journal things that I'm likely to make money because it costs me more in time than it does in money. Okay, you get it? Like, it's a weird mental thing. One way to explain it is when you open up a trading account, your very first trading account, you say to yourself, most people lose. I don't really know what I'm doing. It wouldn't surprise me if I blew up my trading account. You say that in your mind. So you go through a period and you can justify your losses in the beginning. It gives you a way out emotionally. Oh, I blew up my trading account, but most people do. It's not my fault. It happens to everybody. My broker's probably hunting my stops. The game's rigged anyways. I think I'll go do something else. And off you go and find your new thing. Okay? It's because you justified your loss. So so saying, hey, you lost some money is not enough to change your behavior. Public humiliation will, but also sacrificing things that you enjoy more than money. And that's freedom. Your freedom is more important than money. You can make more money, but you can't make more time. You're like, well, I really like hanging out with my buddies and drinking some scotch and hanging out at a barbecue, maybe doing a cigar. And like, I don't want to spend a beautiful Saturday journaling my trades. So what you do is you just stop making piss poor trades. If it looks mediocre, you skip it. Right now, you might say, oh, well, we'll give it a try. Boom. Oh, we'll give that one a try. Boom. Oh, let's see what happens here. Boom. Right? But if those 3 boom, boom, booms, which took you 3 seconds, cost you an hour and a half of your time, you don't take it. And it changes your behavior in a positive way. The way that will lead you to success. Okay? And of course, people that fail don't do the effort. They don't have the time. They don't have the consistency. They don't have the discipline. And, well, one or all of those things that lead to their failure. And then they say, oh, well, my trading account blew up because brokers hunt my stop. Well, maybe you're not a very good trader. Oh, no, I'm a good trader. I know it. I can feel it in my bones. I'm a success. Okay? Well, good luck with that. All right, so there's kitty cat, and then you look at Aussie, okay? And you see Aussie stronger than the yen, right? Let's do hourly. I like to have congruency, right? Hourly, hourly, and hourly. Okay, so you look at it this way. Aussie's stronger than the pound. Aussie's neutral with Kiwi. Aussie's weaker than the Swiss franc. Okay, Aussie is stronger than the US dollar, and Aussie stronger than the yen. Okay, so somebody says, hey, should I sell Aussie dollar? Like, what are you talking about? What's wrong with you? Right, Tyron? You want to sell Aussie CAD? There's only like one currency in the whole world stronger than Aussie. So you want to sell the second strongest currency on the planet. Why? Oh, the MACD told me to. Dude, no. Come on. Come on. Come on, Tyron. Come on. Come on, Tyron. Right? So we gotta get better at doing the analysis first and then look for trades. So one of the stories I typically tell, and I'm not going to tell it, but I'll tell you why I typically tell it, right? In a situation like this, I talk about my early days before there were really even charts. Charts and trading platforms were two different things. You had your brokerage account and then you had charts. So I'd spend at least an hour every morning, at least, maybe more like 90 minutes. Every morning on my trading platform, I'd look at volatility statistics overnight, and I would plot them into an Excel spreadsheet that I created. And at the end, I paired the strongest currencies with the weakest currencies. So I would look at, I wouldn't even consider Aussie CAD. Wouldn't even be on my radar screen. Okay? So I would find the strongest and the weakest. And in this case, it'd be like Aussie versus dollar, Aussie versus yen. Okay? Now, once I know I want to buy Aussie versus yen or Aussie versus dollar, okay, now I know what my strategy is. I'm a buyer of those currencies because of overnight volatility statistics, not relative just to each other, but to everything. Okay, so I found out Aussie is strong versus almost everything. Dollar is weak versus almost everything. So I'm going to pair the two. So I would know all of that strategically first based on statistical analysis of overnight volatility. Okay, and then check this out. After 90 minutes of trying to figure all this out, this relative strength exercise, then I would open my chart and say, all right, I want to buy the Aussie dollar, so I want to buy a dip. Where's support? And I'd probably be on this chart, okay, 15-minute or less back then. And I'd probably do things like, well, something's going on here. So if I started trading, typically I'd be in on one of these moves here, right? So let's say this one occurred in the past. I'd probably try to grab one of these if I was a bull, okay? And now I'm concerned about this, but we should be able to break above that if it remains bullish, right? So now I keep this in mind throughout the day. Okay, green, green, red, red, buy. Green, 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 red, red, buy. Green, 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 red, red, buy. And that's my whole day. That would be about 8 hours. Over the course of 8 hours, I might get 3 trades. Okay. So right now I have red, 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 but I don't have the higher high. So I got some questions about this. But I could do it. Okay. Right? I want to stay above this area. I could do it, so I'd have to pay attention. So then I would want to drop even smaller and say, if it's going to flip, where it's going to flip. I already know why it's going to flip. Okay? So I need the up, the down, and then the up. So right now I'd say, well, it could do one of these things. I want to look at the role reversal. It could do this. Okay? It could do this. And if it does one of those things, I'm going to be a market participant. Okay? Yes, that would be relative strength. Yes. Okay? My message to you is very often people, and maybe Tyron was, guilty of this today, of opening charts looking for patterns. And there's a pattern there, of course. Tyron sees it. It's a role reversal on Aussie CAD. I saw it too. It's just not a good trade. Now, it might be a good pattern, but it's going to lead, at best, to mediocre results. Yeah, you'll make money there, but only if this goes up, and this will make you more money. If this goes up, USD CAD will fall. Or actually, no, you were selling USD CAD, right? So you need this to come down first. Okay, but anyways. Right, you got your trades have to, look at that. Your trades have to make sense first. Hang on. I clicked the wrong X. There we go. So, right? Trading while waiting is, yeah, that's a sin too. Okay? Video games are pretty cool for that. YouTube has been fantastic for that over the years, huh? You're like, what do I do? Oh, it's going to take another 45 minutes. YouTube. Okay? Okay? So, yeah, so where am I on this one? So here's my entry here. So I'm long on this one, making money. Okay, so I've what? So I'm at 509 pips with 4 trades. Okay. Selling dollar, selling dollar, selling dollar, selling dollar. Huh. Whale oil BMR fish. Okay. What does the chart say? The chart says here. Okay. I think it's really this though. Okay. And that means I think it'll do something more like this, okay? And then we got to work. So here's what I'm thinking. I don't want to click to the daily. I think we're going to go like this. And eventually over 3 weeks get our way up here above 80. I think 80 is going to be a real challenge. Okay. So that puts me at like 350 to 400 pips profit. And then the next one is going to be here for the month. And so I'll have to make decisions. Am I going to hold this for 3 months? I don't know. Okay. Very cool, HK. Very cool. There's a certain satisfaction of waking up in the morning seeing that you made 250 pips while you were sleeping. Because I know as a short-term trader, a 250 pip day is a pretty freaking good day. I mean, you have to work. You got to hustle for that kind of pippage. Or you are more of a fundamental swing trader where you're letting your winners run more. And I just never forget. You just never forget, right? You just wake up, you're like, oh, wow, good day already, right? Like, you're not even out of bed. I don't know about you, but my feet haven't even touched the floor yet, and I'm already looking at my trades. And you wake up, and isn't it a wonderful feeling where you've opened your eyes just enough to turn on your phone, check your positions, and it says, hey, Good morning, Wayne. It's an awesome day. It was raining pips in Europe. You did so well. Your analysis is spot on. The dollar is tanking. Knuckles, tummy, right? And you're like, wow, I've been awake 47 seconds and I'm ready for the champagne, right? I wonder what else is going to happen today. Okay? And then you're, right? And then your car breaks down. You're like, oh, it's all right. I already made the pips. It's all right. The pips will pay for it, right? And you just roll with life because life is difficult. That's funny, Beckery. Yeah, I don't do that anymore. But I remember in the very early days, my dad was learning how to trade with me. And he did things like he took sweatbands, for basketball players, and he stuck his phone there, and it would vibrate at a certain time, like London Open, which in California is midnight, I guess. Anyways, so it'd vibrate to wake him up, right? And he'd look at his phone, but he stuck his phone in it, is what I'm trying to say. And it would vibrate in the middle of the night, so then he'd check his positions and then shove it back. I'm like, okay. And that's back when I was a day trader growing into a swing trader. And I was learning that. After a while, I'm like, I hate waking up in the middle of the night because I'm always tired. Now, I'm still always tired. But I remember, like, I got to find a way that it isn't so scary all the time, because it's hard. It's hard trading and being fearful all the time. So one of the things was I need to learn something about like why the market works. I didn't even know you called it fundamentals back then. I need to know more. I need to know, like, I need the why. After spending years looking at my moving averages, which moving averages on which time frame, which oscillator on which time frame with which settings and which this and which that. After spending a few years really intensely focused on technical analysis, then I'm like, I want to know the other stuff. I want to know the other stuff because I'm sick of waking up at 3 a.m. to make sure that, my trades are safe. I want to know, like, oh yeah, this is going to go up for the next 3 months. So I'm good. I can sleep. This day, this week, irrelevant. Okay. And you're like, whew, nice. Okay. Well, Thiago, it's a double-edged sword, though. I've woken up having lost 5,000 pips, not in a true loss, but opportunity cost, right? So where overnight the ends all drop, but you're on 37 trades, and you're like, holy shit. Okay, right? So imagine there have been times where I have, like, I don't know, 120, 130 trades open. And when it works, it feels fantastic. When it doesn't work, it's scary, like you wouldn't believe. Because the ends drop 100 pips overnight. It's thousands and thousands and thousands and thousands and thousands of pips. So now you're really laser focused, right? But so either way, you can't get away from the stress of responsibility. The one thing I've never told you is trading Forex is easy, and I've never told you it gets easier. Your concerns change. That's cool, Robin. Robin and stealing. Go. I grabbed the money. Robin snatched the gold. Grabbed two girlies in the beard, that's gold. Anyways, Robin and stealing. Cool. All right. So anyways, if you wanted, you could move your stop here, right? You could even move it higher if you wanted to, but I don't. I don't know if we care, right? It's funny, I'm right on the line. Look at that entry right there. It's right there. It's right on the M2. Isn't that funny? It's right on the M2. Huh, huh. Right on the M2. Look at it. Exactly on the M2. Beautiful. Nice trade, Wayne. Shot. All right. Yeah, for sure, eh? For sure. Well, let's do some commodities. Here's the oil swing trade I did for you. You're welcome, eh? Oh, for sure. Okay. Very nice. 50% retracement, roll reversal, psych level. Long and gone, Bubba. Long and gone. 50% says we're going to 1382, which puts us at 71. But if you bailed at 70, I wouldn't blame you. Well, Muhammad says, do you want to sell the Dow? Well, you don't understand what I'm doing then. Okay, you see this? It says buy the Dow. It says buy the S&P 500. It says buy oil. It says buy gold. It says buy Bitcoin. It says buy euro. It says buy pound. There's no pound on here. It says buy pound. It says buy real estate. Okay? So if you're like, hey, Wayne, should I sell Dow? You don't understand what I'm doing. Okay? So now the question is, Mohammed, you could, of course, but you're asking me if I would recommend that. But based on what I'm doing, you should know that I wouldn't recommend it because that's the exact opposite of what I'm actually doing. Wait, well, okay, Mohammed says, why would you want to buy the Dow here at all-time highs? Fundamental analysis. Okay? Think of it this way. There were people during the dot-com days that said, don't buy the S&P 500. Don't buy the NASDAQ because it's way too expensive. And then it went up. And then they said, sell the NASDAQ. It can't be this high. And then NASDAQ went up another year. And then they're like, it can't be this high. The dot-com stuff is crazy. All the companies are phony baloney. You should sell the NASDAQ. And NASDAQ went up. 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 And then finally on the 9th year or something, NASDAQ came down. And they're like, see, I told you. Okay? So you have to back yourself off a little bit. Okay, Mohammed? There's price. Okay, great. But you have to understand price is a function or something else. No, it would be price. No. Well, I'm trying to think of how to write it. But, okay, so price represents something. Oops. Let's make this a little thinner. Okay, price is reflective of something. Price in of itself is an abstract. Okay, you're buying a share of a company, for example. And you're saying, okay, well, price is an abstract, but I'm looking at like it has some sort of financial relationship to like earnings, for example. It has a certain relationship to the macro economy. Because if the economy is going to be better in 2 or 3 years, earnings will be better in 2 or 3 years, and then price would go up because of the increase in earnings, right? Even just sort of like discounted cash flows, time value of money kind of stuff, right? You could expect it. So, like, what do we know? The expected return of a stock is equal to Does anyone remember? I think it goes the risk-free rate of return. No, wait. Risk-free rate of return. Let's see. I think I have it over here. Yeah. Risk-free rate of the return plus the beta times the risk-free, no. Wait, because it's beta, right? It's beta. So let me figure this out. If it's beta, then what you want to do is it's the expected return for the market plus, I have it over here. No, minus, because you're turning it. Okay, I haven't done this for a while. Minus the risk-free rate of return. Okay. All right. So Mohammed, this is what you're talking about, right? Mohammed's like, the stock market is at an all-time high, which is a price. It's just price. So the expected return of a stock is equal to the risk-free rate of return plus the beta times the expected return for the market in general minus that risk-free rate of return, which is sort of like a growth rate, right? So risk-free rate of return is going up. You got to look at the beta of the overall market, or the beta of the stock times the market, I guess is what it is. So what I'm trying to say is, if you're trying to do these calculations to figure out the price of a stock, then the price of all 30 stocks in the future is what you're supposed to be trading. The Dow is at an all-time high now because of what was, people bought the stock 6 months ago and a year ago because they thought, well, not quite a year ago, after the big drop in COVID, they said, well, I think those companies that got crushed with COVID shutdowns will be making more money in a year than they are now, because they're not making any money now. So in a year's time, they'll be making more money, right? So you're always trading a year and ahead, Mohammed. So what's happening now is you have to look at the macro level, but also the central banking policy, okay? And you should also look at fiscal policy, which is just being implemented today, fiscal, right? So there's, right? So to dumb this down, the U.S. government is supporting the economy. The central bank is supporting the economy. Okay, they're adding cash to the economy. So they're going to sign into law today the, what do they call it? The COVID, it has nothing to do with COVID except, but anyways, $1,400 checks are going to go out. That's going to push up earnings for the Dow stocks, okay? So this will push up earnings. This was supporting businesses. Now, when businesses buy stuff, it becomes earnings for those, right? And then globally, when you look globally now, other countries seem to slowly be catching up too, recovering, right? And that's citizens and businesses, right? Consumption and investment, improving over the next year. So 2022 should be better than 2021 as other economies reflate as well, which would then say over the next 12 months, additional earnings. So fiscal stimulus, central banking support, increased global macro, right? And all Dow companies are international. You're basically buying the MSCI in a way, right? So all of this will lead to additional future earnings 1 or 2 years now, okay? So you plug all that into this and you're like, yes, we're at all-time highs now, Mohammed, but it'll be higher in a year. So Mohammed's like, people will get out, inflation is coming, the Dow is due for major... none of that's helpful, my friend. None of that's helpful. Okay, it sounds emotional right off the bat. You're like, you're not doing these calculations. You're not thinking this far ahead. You're not incorporating this. And so I would just say, I know what you're feeling. I know that's how it feels, but I think I've done more research. So you might be right, but I'm probably righter. Okay? So like people will get out, inflation is coming, then blah, 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 blah. Turn off the TV. Okay? Turn off the TV. Okay? By the way, if inflation is coming, that's going to weaken the dollar and I'm still going to make money. So, that's all. Yeah, I know. Okay. Well, you're making a projection too. Okay. You're making a projection too. So that's all. Okay, great. I have a belief system that I'm using. Cool. So this is what I'm going to do. Okay. And they are projections. It's not necessarily a projection, it's a model, which is slightly different, right? But what I'm telling you, without a doubt, okay, the U.S. government spent $5 trillion now, plus we got unbelievable support from the central bank to the tune of free money and quantitative easing at the same time. All of that reduces the value of the dollar and will push up asset prices. It's the reason they're doing it. So oil will go up, gold will go up, the stock market will go up, real estate will go up, and it's because of the design. That's what's actually happening. Okay? And I'm making money in the stock market. I'm making money in the real estate market. I'm making money in the Forex market. I'm making money in these other asset classes. So I see it like in reality. Okay? So going back, I will do those. I will continue to do that type of analysis. I don't think cap M. So what I did for you was cap M. I don't believe in cap M, but I do believe in fiscal and monetary policy. Okay. Okay. Well, Mohammed says you can't keep doing that kind of stuff because the Fed is running out of tools to hold off inflation. Well, actually, you got it backwards. They're actually creating inflation. So right there, maybe it was a typo, but they're creating this inflation. It's by design, Mohammed. That's why I'm trading it. But let's say that was a typo. Is the Fed running out of tools? Yeah, they ran out of tools a while ago. So typically what a central bank does is handle their mandates. So the Fed has two mandates, right? Stable economy, keep inflation in check. And typically what you do in a normal situation is you just adjust interest rates, and you do that through open market operations. And it's normal. Okay? Then that failed. So then the central bank tried QE. Okay? And that also worked. Okay? But quantitative easing only push up asset prices. Okay? This is why I know the stock market goes up, the real estate market goes up. That's what it does. It pushes the value of gold up. That's what it does. If it's an asset, it will go up in value. It's the whole point of quantitative easing. If you own real estate, you got richer. If you own gold, you got richer. If you own stocks, you got richer. The funny thing is, 50% of Americans are poor. Okay? 50% of Americans don't own the stock market. And they're like, well, rich people have it unfair. Well, dude, just buy the stock market. Well, the issue is there's more than one reason why they're poor. They don't know. Okay? So this is a flawed system, and it's a long-term stability program. But the downside is, yes, it saves the economy, but it makes rich people richer. It doesn't impact poor people. So a lot of people are like, it's unfair, it's unfair. No, it's totally fair. You can buy the stock market whenever you want. Well, I don't have any money, I don't have any credit, and like, okay, well, whoa, right? And I don't have any education. Okay, well, those are the bigger problems. You don't have any money, you don't have any credit, you don't have any education, and you don't have any money because you don't have any education, but. Okay, gotcha. Got you. It's very complicated. But if you simply owned anything, if you owned a home, the value of your home went up. Why? The Fed did that. So now quantitative easing has gotten to the point where interest rates are zero, and we've pumped in trillions of dollars already in quantitative easing, and the rich people are filthy, stinking rich. It's crazy how rich people are. So now we have income inequality. So, and the Fed can't do anything. That's where I'd agree with you. A pseudo-intellectual. Wow, Muhammad, look at you. Now you're getting personal. Well, I'm glad you're a real intellectual, and I'm a pseudo-intellectual. But anyway, so what I'm getting to a point, the point here is I agree with you where there's nothing the Fed can do with interest rates. There's nothing to do with quantitative easing because all asset prices are already way up. Okay? So the next step is what happens. And now a different part of the government steps in, and it's fiscal. Okay? And they say, well, interest rates are zero, quantitative easing made rich people rich, but we still have problems because poor people are still poor. So we will just give poor people money. And maybe that'll fix it. The interesting thing about that is it's short-lived because poor people will spend the money and it'll go right back to rich people that own assets. They own the stock market, so based on what I just explained, people get $1,400 checks. They'll spend the $1,400. Earnings will go up for companies. The value of the stock will go up because of the increase in earnings. And somebody owns the value of owns that asset. They own a piece of the stores where the money is being spent, and rich people get rich anyways. And poor people will spend it on non-assets. We'll call it consumption. They'll buy a car, terrible investment, right? Like I had some custom stereo work and some other interior stuff done at a local business, you know, where they do all these custom Lamborghinis and stuff like that. And people are bringing in their cars, spending crazy amounts of money. It's not assets. They're buying car stereos, they're buying LED glowing lights, and they're buying these rims that are crazy expensive, and they're putting all this money in their car, but they don't look like they own their own house. I don't know. Maybe they do. Maybe I'm ignorant. Maybe right. But it's not a race thing. It's you know, there's giant trucks that you need ladders to get into. So it's hillbillies too. It's everybody, right? Everybody with some disposable income at that store is spending big money, right? Whether it's bikes, trucks, cars, whatever. But what I'm looking at is, I'm an economist, so I'm watching this money coming in, and I talk to all small business owners. He's so busy, the guy that owns this, right? He's got 5 or 6 workers, and they're busy a week ahead. They're all booked, right? And so all that money is going in. That owner is making money, but he can pay his rent. He's got 5 or 6 employees. He's looking for more employees. He's got a wait list of people spending the money, but they're all buying non-assets. They're consuming, okay? But I don't, right? So, I mean, they're consuming, but they don't have any assets, okay? If you took the $1,400 and bought the Dow at an all-time high, if you think that the money that the government is spending will lead to an increase in consumption and investment, that expected future revenue earnings will push the stock market higher. So I'm not arguing that we have too much inflation. Well, we don't have too much inflation. I'm not arguing that we are not going to get inflation. I'm arguing that we're trying to create it. There's nothing that Germany could even do to create inflation. Everyone wished they had inflation. The United States have been trying for 10 years to get inflation, and now we're starting to get it. It took $5 trillion. Great. Okay, so that's why the Dow would go up. The increase in consumption, right? So how do you do this? You go, okay, so let's say people get $1,400 checks. Okay, you have a choice: consume or spend equals invest. Save, sorry, this is save. Consume or save, what's left over is investment. So you can save it all and not buy anything. It goes into a bank, and the bank will invest it into mortgages, and you're golden. Or you buy the stock market with it, which means now you own an asset. So on a liability, so let's do a balance sheet here. Okay? Okay, balance sheet. Okay, so you got assets and liabilities. You get $1,400, so you have cash is up $1,400. Okay, and stocks, right? This is your retirement account. Okay, now you get $1,400 from the government. You don't buy a TV, you don't fix up your car and put LED lights on it. Instead, you take the cash and you buy the stock market. Okay? Your assets haven't changed, but you own assets. Cash is an asset that depreciates. Now you put the stock market, doesn't necessarily depreciate, but you have other risks associated like volatility, right? So if you choose to save the whole thing, it will become an investment. Even if you just put it in the bank will invest it on your behalf. It's called financial intermediation. So if you don't save it, the bank will save it for you. They'll pay you a pathetic little interest rate. Well, but they're paying you 1% and they're lending it to someone else for 4%. Okay? But you get the benefit of liquidity. You can come in and get your money whenever you want. Okay? If you buy a $1,400 TV, you give up cash. You could have bought the stock market, and you have no assets because your TV is going to be worthless in 2 years. There's just nothing there, right? But what happens here? Consumption becomes what? You spend the money. Let's put it this way, and I'll make it bigger. Okay, if you do consume, what's the net effect? It's someone else's income, and now they can choose how to spend your $1,400. And they might choose to buy real estate. They might choose to buy gold. They might choose to buy Bitcoin. They might choose to buy the stock market. They might choose to sell the dollar. Okay? So, you see? Okay? So anyways, you see what I'm focused on? It's sort of the decision-making process. So if Mohammed totally 100% disagrees with me, well, that's okay, because Mohammed might be right. It could be true. It could be true. And then everything changes and I'll have to change my tone. But what I'm trying to do is explain the situation we have been in and we are in. Okay? And so all I'm saying is what factual evidence supports your theories? That's all. You can have your theory, you can have your bias. I'm totally okay with it. It's what the markets are. Okay? There's always someone on the other side of your trade, so that's totally fine. But what I want from, my community participants is you come to the table and you're like, wait, dude, the Dow's going to crash. We're at an all-time high. Well, right off the bat, I understand that. Okay, it's very, very expensive. But what is the reasoning? Oh, I don't know. It feels too expensive. People are freaking out. They're going to freak out. Well, look, that's not research. Show me. How do you define it? How do you measure it? Right? Like, just take me through the thought process. So if I can bust out, like I just did, my thought process, that I understand the stock market's at an all-time high, but that doesn't mean it won't be an all-time higher price in the future. And so now I'm like, well, what's going to happen over the next 1 or 2 years? And then I look at that, and either way, asset prices are going to go up, including the Dow. So it's at an all-time high now, but it used to be at an all-time high at a lower price. So now I'm like, well, based on what I see, the evidence, I believe, show that it has a very reasonable chance of going even higher, based on my analysis of not now or yesterday, but what life will be like in 1 year and 2 years. And of course, if I'm right, I get paid. And I don't think I own the Dow outright, but I own a lot of stock. Okay? Okay? I'm heavily exposed to the stock market. I'm heavily exposed to the real estate market. I'm heavily exposed to the Forex market, right? So I have to make these decisions. And so, again, I'm not telling you you're right or wrong, but I'm telling you I have thought about it quite deeply, and it's a big concern to me and my family and my future. And this is how I go about that thought process. That's all I care about, right? Okay? Okay? Is everybody okay with that? Even if you 100% disagree with me, I want you to know at least the thought process that I put into my bias. Well, so Steven says about Bitcoin, well, all I can tell you is I believe the US dollar is going to weaken. Bitcoin is priced in dollars, so that would have a positive effect, but I don't know anything about Bitcoin. I don't even know why it's an asset. I know it's a tradable asset, and lots of people are trading it, but I don't, I don't know the fundamentals. It seems to be heavily impacted by risk on and risk off. So you'll have to make that decision. But I've made my decision on the dollar, and the dollar will weaken. So one opportunity I could have, because remember, I want to exchange my dollar for something. That's what euro dollar, Aussie dollar, pound dollar. I can exchange my dollar for something. I can get rid of dollar and gain pound. I can get rid of dollar, right? I could get rid of dollar and buy beachfront property in Venezuela. I give up my US dollar and I acquire a physical asset, illiquid, with risk of volatility. Okay? Okay? So I can give up the dollar and take on whatever I want. So could I get rid of my dollar and buy Bitcoin? Yeah. Does it mean Bitcoin will go up? No. But relative to the dollar, it would have some tailwind. Okay? But could the dollar weaken and Bitcoin weaken? Yeah. Yeah. Oh, for sure, eh? And I think it's pretty scary these days where Bitcoin goes up or down 10% in a day or overnight. So I might rather buy the beachfront property in Venezuela. Okay. And no joke, I've actually been looking at beachfront property in Venezuela. And let's just say Venezuelan real estate websites suck. Okay. Well, that's cool, Forex family, but I'm not here to debate, so not really interested. I got other things to do. But I hope you appreciate my openness with my thought process. And you can debate with it internally, I hope, and say, okay, here are the reasons I disagree with Wayne, and go about doing that. I'm totally cool with that. Oh, and Nanda says Venezuela is one of the worst countries right now. Yeah, which would offer, because of the high risk, I'd get a good price. Okay. Why don't I buy a Venezuelan real estate website? No, thank you. That sounds like a work. Okay. Cool. But anyways, for those that have positively contributed to the chat today, I appreciate that. It looks like I have a lot of people protecting me, which I appreciate as well. And, here's the thing, guys. When I go through a process like this, it's not for the purpose of fighting or even debate. I admit I can be wrong. There's a high probability I'm wrong. I can admit that because it's part of the game. I say it's more important to know when you're wrong. Right now, evidence shows that I'm not wrong, in my opinion. Okay? So, but I'm not here to debate whether you're smarter than me or not, or I'm dumb. I'm a what was it? A poser? Oh no, a pseudo intellectual. I'm not trying to be I'm just me. I'm just a guy. I'm just some dude. Okay? But what I'm trying to say is, when I was asked, well, why would I buy the Dow if it's at an all-time high? I was asked that question. So I broke it down as best as I possibly can to explain my thought process. Now, you can love it, hate it, agree with it, disagree with it. I don't care. It's fair game. But I'm the one up here going through in great detail something I've spent maybe 1,000 hours thinking about. And I'm like, here's what I'm thinking. And this is, more importantly, what I think is irrelevant. Whether I'm a bull or a bear is totally irrelevant. But you could look at the thought process and see, whoa, that's interesting. I see what now he's doing. And based on what I just explained to you, you might understand my point of view. That's all. But you could totally disagree with me and you wouldn't offend me. Now, you could be offensive, and I don't like that. But you could disagree with me. That's fine. Cool. Put your money to work. All the best. Right? I'll see you out in the market. Right? But yes, treating people with dignity and respect is a common courtesy that is a foundational part of the community, of course. Absolutely correct. Okay. Yeah, my pseudo intellectual. That's cool. I don't know what more I can do to be the intellectual you want me to be. I don't know how many degrees I need to get so that you say, well, he's got multiple degrees from the best school in the university in the world, best university in the world, but he's an idiot. It still might be true, because I can tell you I had to work really hard to get to do it. So, but if that's not enough, I don't know what else I could do to do it, right? To I don't know, convince you that I have some reasoning. So, anyways. All right, so oil up once again based on the same. So, like somebody asked me, like when I showed you, look, all my trades show you my thought process on oil, but it's also they show you my thought process on the stock market. Okay. You know, going back to the question, you know, if I think dollars down, does that automatically mean Bitcoin up? No, but I can bring it to you this way. GDP, okay, is equal to C plus I plus G, okay, plus, you know, exports minus imports, okay? All right, so if the economy continues to grow, or maybe because of an increase in G, this is the Fed spending, doing its quantitative easing, lower interest rates, but also the federal government through fiscal policy over the last year between Trump and Biden have spent $5 trillion. Okay, the Fed has spent trillions, both of which push up G. Okay, and that will lead to an increase in consumption. Okay, or savings, which would then, whatever you don't consume stays in your bank account, and if it's in your bank account, it gets invested. Okay, but we know almost all of the $1,400 is going to go to consumption. Okay, but here's the thing relative to Bitcoin. This is consumption on a macro level, the consumption of everything. Okay. So, and I had a long argument with one of my economics professors at Harvard about this because I was debating over gold and all this kind of stuff. But here's how he ended his argument. It's consumption of everything. Okay? Good consumption of everything. So, that argument is if G goes up by 5 trillion, consumption of everything will go up, including Bitcoin. Okay? What determines long-term growth, however, is how much gets into I. Okay? And this is one of the things I'm doing in my macro course. How much do you invest? Okay? Can you see like can you see an economy will rely on the short run how much you consume because then they build stuff, but how much money is invested also matters on the long run, doesn't it? Doesn't that also matter? How much gets recycled back into the economy? Okay? Because now you have, let's say, more capital. And the more capital you have, the more you can produce. Therefore, the production gets sold and turns into someone's income, which now means you can consume more because at some point you deferred your pleasure to invest. The investment turned into more productivity, which then gets translated into more consumption. Think about it maybe this way. Okay? Instead of a $1,400 check, the government says, all right, you are the only one that gets the money, so here's $1 trillion. Okay, whatever. Let's say you took your money. Let's just say you have savings. Okay? Let's say you have $1 million in savings. You just inherited from your long lost relative died. You're the last heir, and they're like, hey, guess what? You got $1 million. So great. So the money gets transferred to your bank account. Now you have $1 million in savings. Now you can spend the $1 million and buy yourself a Lamborghini and a gold watch. At the end of the day, the money is going to go away. Or you can say, well, I'm going to buy an apartment building. Okay? Now an apartment building, looks like a physical asset. You can see it, you can drive by it, you can touch it, you can paint it. But the thing is, it's really just a bond. Okay? It's a bond that pays you 10% a year. That's it. Because you have your net operating income minus your financing expenses, which are zero because you paid cash for it. So net operating income is income, rent, minus expenses, taxes, insurance. You're saving money for rent. You got to pay the electrical bill. You got to pay the landscaping bill, that kind of stuff. So what's left over, let's say 90% of the rent goes to pay for the building, 10% of it's left over. Now you have income. Okay? Now you've deferred your $1 million, but in 10 years, you would have received your $1 million. So you used to have savings. Your savings went to zero because it became an investment. You deferred it. You don't buy your, right? So you change your consumption into investment. Now you own an asset. 10 years later, you've earned your $1 million back in income. So now your balance sheet balances, except this has gone up 10% too. So now the building is worth, in 10 years, let's say $500,000 more. So now you've got your $1 million back, and you could sell this for a $500,000 profit and have, now, right? You get your 1 million back, your 500,000 in appreciation, plus over 10 years, you collected $1 million. So now you've turned your savings into $2.5 million in income and asset appreciation in 10 years. Or you buy some Rolexes, you buy some cars, you go on some trips, and 10 years later, you're broke. Okay? So that's why it's important what you do with your money. Oh, that's interesting, Thomas. Maybe email me his name. Maybe he's a boot camper. Cool. So apparently there's 3 thumbs down and only 50% of people have given a thumbs up. So, all right. Well, I understand something was going on in the chat today. I tried to stay focused on what I was sharing. So hopefully it was good. Maybe you click the like button if you appreciated the conversation. Remember, I'm not interested in a debate. I don't care if I'm right or wrong. I've gone through, I've made my decisions, and I'm not trying to adjust, right? Like, I've spent 1,000 hours trying to figure out what I do with my life and with my money, my family's money, my business money. I mean, it's just, these are decisions, and I put a lot of thought into them. And right or wrong, only time will tell, and I will have to adjust along the way. Okay? Okay. Yes, we will have a swing trading group at 2 p.m. Eastern time. We're going to set up trades worth, I don't know, somewhere between 100 and 300 pips for next week. Again. So I'll see you at 2 p.m. I'm looking forward to it. It's probably my favorite part of the week. Okay. So anyways, thank you for being part of my team. Thank you for contributing positive energy to the community at large. Peace on earth. May the pips be with you. May your profits be above average. And I guess I'll see you guys tomorrow. If you're on my swing trading group, I'll see you in a few hours. Cheers.